Hello everyone, K Kim here from Traders Club. This video is gonna be just for you, my blog followers at twotradersclub.com and YouTube subscribers there, though it is a remnant of people there because I will not be tweeting this or sharing it on our social media. So it'll be our little secret, though I'm sure many of you already know where the market possibly going. But I just kind of wanted to share my thoughts on the market, and obviously with this today's move, yes, everybody's bullish, but there has to be some game plan up to how to trade this and what are the perspective and what are the pivot levels and what can we expect and things like that. And I thought I'll just share a couple things here with you. We're looking at SPY here in daily chart here. One thing I wanted to talk about is this, and when we broke below this level right here, you can see that we broke below that, and that was when I initially went short there, and today I got stopped out with a very minimal loss because I had such a great short entry there. So that's one of the things why I strongly emphasize that making sure that you don't chase a trade and you make sure you get that low risk high reward entries there. If you can't get them, might as well sit out because some shenanigans can happen like this. And obviously if you're going against this trend, there can be a shenanigan happens. Anyway, shenanigan happen. But here's one thing that I talked about with the club members last night is that though we had Spider breaking below the pivot level, this uptrend support level, what was happening in Russell 2000 is, well, we never broke below the pivot level. And something I've been talking about for months now, we have these discrepancies. We have a small cap, the micro cap, and Russell Russell and small cap, same thing. Russell, small micro caps, and Qs, they're all up there, but Diamond and Spider and financial sector, they're all looking bearish, because one thing we saw in financial sector is definitely this head and shoulder formation, which was a threat for the bulls, which I'll talk about in a minute. But here's a thing that I want you to kind of get a good idea about. A Spider pretty much came down before today's move there. Diamond also came down severely. And financial sector, well, we had this very well defined head and shoulders. But through all of that, even without today's move and last several days of move, something that I kept making sure to contrast and compare with was to what are those small micro caps doing. And obviously micro caps was still hanging around at the top here. Also Nasdaq was also still hanging around. I mean, last 2 days it came down hard when the whole market tanked, but before that it was still coming, still hanging around at the top here. Same thing, but most importantly though, it was a Russell that really I was paying attention throughout the weeks and months here, because the fact that Russell has this well-established uptrend, and this thing really pulled the whole market on its shoulder and just marched to the upside. And one of the things we talked about yesterday was, well, when Spider came down right here, this was a candle alert. And I think I tweeted about that we had a candle alert. Basically, this guy showed up here, and last time when he showed up around that 100 SMA area, well, we did this. And so it doesn't mean that just because we had that candle we're going to do something similar, but it was definitely a warning signal for the bears. And at the same time, when we have Russell 2000, well, not breaking below this pivot level, this uptrend support, well, that adds to that, analysis of that candle alert. But here's the one thing I want you to kind of see is Spider. When Spider came down, so the irony of that candle that we saw yesterday here, right here, the irony of that candle is we saw something similar back here, right? Let me do that right there. So that was what, June 24th, right on that 100 SMA there, and we bounced hard. And that's the same guy showed up yesterday. So it has this guy has a pretty impressive resume from the last time. But the irony and kind of cool thing about that is on June 24th, it was right here on this day, right there on Russell. This was when this uptrend support was continued to hold right on the June 24th, and this was yesterday, and it was the same area. And so that was a huge warning signal, because when Spider broke below the uptrend support, well, Russell didn't. And last time when Russell didn't break down, well, this thing can, Russell pretty much brought the whole market to the upside. And so this time, well, the question was, can it do it again? And so, benefit of the doubt actually still goes to the bulls because of the fact that we're still in a bullish uptrend when we're looking at a big picture. And obviously, we wouldn't have really known truly what was going to happen if we're going to do some shenanigan like this, or if we're going to continue higher. Because, well, the thing about what happened last June, though, or 2011 June, though, is a little bit different sentiment, because 2011 June, what we did was we put in these, equal lows. Equal lows. It's not lower, it's not higher low, it's an equal low, which means there's a lot of pressure from the up top to try to push this thing down. That's what it means. Because you know what? The definition uptrend is what? Higher lows and higher highs. But when we look at a big picture, Russell, we have not really made equal lows, have we? Look at this right here. We put in an equal lows back in June, June 2011, but here we have not. You see that we don't have equal lows anywhere. We're still in the process of what? Lower high. Same thing with Spider. And I know I posted some, few charts to consider. There's some bearish divergence. The sentiment, it looks pretty similar to back in 2011 when we look at MACD. And obviously, you guys know that we don't trade off of that indicators. They're just there as a reference point. But even then, right here on Spider, you can see that back in June 2011, we put in equal lows. And that was a huge warning signal, because once you put in equal lows and once you stop putting in higher high and putting lower high there, lower high, that was a huge warning signal after equal lows. The thing about that is we really haven't put in that lower high. Not only that, we don't even have a lower high either. We had lower high here. We don't have a lower high anywhere. We have higher lows or higher highs and higher lows still. You see that. And we're not able to break below 100 SMA as of today. You can see that 100 SMA will continue to find support here on 100 SMA. Well, back in June 2011, we broke below 100 SMA, went back up. And again, that was also the pressure we've been talking about. You can see that we came down below 100 SMA. That just tells you there's a lot of pressure there's a pressure coming up top to the downside. And then we found support at 200 SMA. Well, here we haven't even begun to touch the 200. So you can see that how, we're in a different environment than we did back in 2011. Though we had indicators like MACD here. Let me just go to there and show you what that was all about. We had an indicator showing that we have a possible scenario of that sort, right? But then all the chart patterns tell you otherwise. And especially with today's action, if this thing to continue to come down lower, I would have said that we were going to do something like June 2011. And that's why I was holding my short there on Spider. Because if it did come down somewhere even here, then we're going to do some shenanigans like it did June 2011. And then I'll put a lot of weight on this, MACD bearish divergence on the weekly chart there. However, with today's action now, we can't really argue, that we're going to have some, have some kind of correction. I mean, we still could, but as of today, I'd have to say that I'm starting to be very, very bullish. Very, very bullish. And you could say, well, what about these peak staircase? Are they saying something? Are they supposed to be some kind of reversal pattern? Again, that pattern needs to be confirmed by putting some equal lows and putting some lower highs. So if you're wondering about this pattern right here, let's talk after we put in lower high for the first time. What I mean by lower high is this. When we look at a daily chart, obviously if you're looking at an intraday chart, you can say that this is a lower high. But when we look at a daily chart, obviously that's not lower high. Lower high meaning is at least some kind of peaks that, here, you see. Right here. See, you look in the big picture, that was definitely a lower high. Wasn't that? Was it not? We can see that equal lows, higher high, and then lower high, because we were not able to go back up to the recent high and close above that level. Well, the difference about today's action is, we actually closed above that and came down, and we actually put in higher low now. See that? We couldn't even begun to come down to put in an equal lows. That was my target anyway. I went short here on Spider. My target wasn't like, like 157. This was my target because I knew we're still in uptrend. We could still bounce and at least put in that, equal lows there and then go up and put in lower high. Then we're still in that correctional move. But if you just look at this, we haven't even begun to put in lower high yet. We're still in a higher high and higher lows as of today. So if you're wondering about if we start coming up here, we fail to break above this high, and we start putting in, lower high here, you start paying attention. And then we break below this neckline, because once we start putting in lower high, what is that going to do? Well, we're now making that head and shoulder formation. You see that? You see that? If we get that, and we break below this neckline, we're going down. Then we're going to 200 SMA, which is about 160. 150 and 160. Until then, as of today, the sentiment is bullish, the trend is up, the big trend is also up, and this thing is just refused to come down. It's just refused to come down. And so it's really tough to short, this market is rather to be long here, but if you're cautious about it, obviously, you making sure that we break above this level to make sure that we don't get the lower high of that, but as of today, it looks like, because we've been making higher lows and higher highs, I won't be surprised we come at least to this level right here, and possibly we're doing some like rising wedge, and I'm not sure. As of today, we have to see how it's going to deal with that. But I mean, there's a lot of things can happen at this point here. We can do this, and then we can go up, break above that, come down, retest, and then continue higher. One thing we've been talking about emerging market, something we've been watching on emerging market is this: 2008. When we had the market crash here, right here, this was a 2008 crash. What it did was we formed this nice double top, double bottom here with the higher low, and then we broke above the neckline, and this thing soared. What happened was, and if we just draw the uptrend line, we've put in another double bottom here with the neckline broken there. We came and retested it and never broke that, never broke below the neckline. You can see that right here. Double bottom here, higher low, neckline, came retested, and we bounced. See that? So you can see that emerging market also really condoning and really approving this uptrend market there. And that's one of the things I've been talking about, is that we continue to have some of these discrepancies in these indices, that they're not all confirming. There's something telling you this, because the only thing really came down was really Spider and Diamond with the huge warning signal. But man, Qs and small caps and micro caps and emerging markets, they're all up there. They're still up there. Right, Russell 2000. Now we're above recent pivot here. This is the recent high, and then we retested a couple times, came down a bit, and then we went right back up. Now we made a lower high there, and we're onto the what? Because that's what we've been doing. Lower high. Here, this is a definition uptrend. What happens is what we have to assume, that when it comes down to create a lower high, you have to assume that it's going to go up, create a higher high while breaking recent high. Comes down, create a lower high. When it goes up from that level, we have to assume, or at least high probability, that it's going to break the recent high and create new high. When it comes down, create a lower high. When it goes up, we have to assume that we're going to break. And so in that perspective, in that manner, in that fashion, we put in what? Lower high. So what do we have to assume? What I'm going to assume that it's going to break recent high, make new highs, and then continue to do so. And I'm not sure when it's going to break. As long as Russell is in this channel uptrend, we have to assume that trend is up. Until I see Russell breaking below this level, until I see Spider breaking 100 SMA, at least, putting in some equal lows, and in lower high, I would have to assume this trend is up. And so this is where I'm going to start to accumulate some long positions, maybe on the indices or maybe some other individual equities and whatnot. But So that's my analysis there. We're above all the moving average now, back above that, and so looking as of today, looking very bullish. I am very amazingly bullish in the overall market. How amazingly every time when the bears come in, this thing, bulls would just come back up and buy the dip and bring it right back up. We had a lot of reversal pattern. We had all kinds of divergence everywhere that never played out this whole year, and I have a feeling that in looking at the emerging market and all these other indices, I have a feeling that we're going to end the year with the bullish run. I mean, we would have up and downs, but I think in a big picture, I don't think that this Russell, this uptrend is going to break anytime this year, and that's just my thought. Okay. And quickly, I'll talk about Apple here real quick. Actually, I forgot to say one thing. Financial sector. Something that I talk a lot about financial sector, and I tweet a lot about it, is because I like to look at financial and making sure financial is strong when the overall market is also strong. If I see financial start looking weak, that's when I start to really concerned about the overall market health, because I really want to see financial to be the one that really be that core of the broad market. And obviously after this head and shoulder formation, was very worried, and we got this neckline broken. But because of this the massive size of this head and shoulder, we really have to check the weekly chart. And when we look at a weekly chart, obviously neckline is not broken yet. You can see that it is not broken as of today. And tomorrow's Friday. We have one more day to trade. And obviously in one day, I don't think this is going to come down enough to make that, make the bearish candle. Even if it pulls back a little bit, still going to look bullish in the weekly chart. And one thing I've learned though is that once these head and shoulder formations, once they get negated and start to be nullified, that's when bulls can go crazy. Watch the financial sector, we break about 2080, how fast it's going to run up there and probably go to where the Fibonacci level is going to start to go. I mean, it could even come to about 21, some of these levels pretty quickly and then we probably come down, retest, and then go. And so again, these head and shoulder reversal formation has to be confirmed. And initially daily chart, we did confirm that. You can see that. But then because of the size, how messy that is, we really have to check the weekly chart as well. And when we look at weekly, and obviously it has not been confirmed. And obviously if you look at a line chart, that's where you can really clearly see where the neckline is. We haven't even begun to come down on a neckline. You can see that. We haven't even begun to come down. So that and all other analysis, I am amazingly bullish. That's the quote there. Amazingly bullish. Let me look at Apple real quick, and then I'll look at Amazon, IBM, since I was in that trade recently there. Here's the one thing I really like about Apple. First things first, you can see that right here, 100, 200 SMA, how they are start to cross. We have not seen that ever since. Last time we saw that was this right here on this day. This was June 9, 2009. This was the first time we saw that golden cross, 100 SMA, 200 SMA. And today is the first time we've seen that golden cross since 2009. So it has been 4 years since they were reunited. So this is a big moment. They haven't seen each other for that long. This is a huge moment. And I really like the fact that when markets start really tanking, I like the fact that how Apple consolidated here. And you can see that we're still above 10 and 20 MA. We have a rising 50 MA. I think that this thing could be ready to really bust out to the upside. And I really like the fact that, that we not only we're able to consolidate, but, when we look at a weekly chart, look, now we're looking at a big picture. And when I go to line chart here, something I've been talking about, in my blog and articles and videos recently is this. We had a double bottom pattern there, and this is a neckline here, and we retest and we start coming up there. I talked about how many times those neckline testing is when true power comes up. Remember this right here, head and shoulder formation, neckline, retest, boom, right? Right here, double bottom here, neckline, retest, and obviously this is, it's a tougher to draw neckline because some of these peaks here, but we can see the idea. You know what I mean? Neckline there, retested, and then something like that. So I really like that how we did not compromise that and didn't come down to put in another lows or and obviously we if we're looking at the big picture, we're part of the lower high there and the higher high. However, in the middle, we're in the middle of it. So the question is it going to come down and put in a lower high, or is it going to put, it's going to go higher and put in a higher high? See, that's the question. That's what the bulls want to see, is that they want to see Apple start putting that higher high there. And because the market is bullish as a whole, as a broad market as of today, and we have a 200 and 100 SMA golden cross here, and then we're close, we're still trading above all the moving averages. I have to say the benefit of the Dow goes to bulls, that there's higher chance it's gonna break to the upside. And obviously, if you're aggressive trader, I mean your entry could be somewhere here about 493 or so. I guess the more conservative, or if you want to be more safe, about 497. Really safe, 415 there. But earnings coming up end of October, and October 22nd is the news of the new product release and all of that. So until then, we might have some anticipation run. I think as long as the market continue higher, I think that can also support that. The stream of the market can really add to that wind as well. So I really like Apple here. I think Apple can make some new highs here. And if you have seen my recent article, my latest article on Apple, where I talked about the levels I'm watching, there's levels that I talked about, I think 530 and 550, and I talk about that in that article. And if you haven't seen them, make sure. So there's a reason why there's some of those levels can become 530 and 550 can be next major resistance level there, and target if we can break above 510 there. Quickly, I'll talk about Amazon. Amazon is a trade that I got in here, and I got stopped out at open there with a little bit of gain. But we do have a bearish divergence. If you've been following me on my blog, you've probably seen that already. So it's really tough to go long here. I mean, this can be a bear flag or some kind, and then do this. We haven't even begun to reclaim 10 and 20 MA. If you're really going long at this point, you're actually kind of trading off of without a confirmation and not really being safe. Though, it is, Amazon is bullish stock and market is bullish, so I guess it's not as bad though. We are above 50 MA, so I guess it won't be too bad. But, you can see that once this thing kind of closed below 10, 20 MA, it could continue lower there. And with the bearish divergence in the picture, that's why I'm not holding on to my shorts, or I'm not long either, because it came down pretty hard. And even with that kind of candle, even with the gap up, it could easily be maybe a bear flag or some kind. So I wouldn't really touch that, at least at this point. Lastly, IBM. This is a position that I got in here, edited there, edited some more here, and then there, and then close 65 position there, and then today, right at pretty much at open, I closed all of my positions. Has been such a great trade there. And one thing I have to realize is, the stock, equities, they're not going to come straight down. And I know that fact. And if market continued lower today, I think we could have bounced and then come down. But as you can see, that we've been putting lower highs and lower lows here. So, I mean, if you think that this thing going to come to about 216, it could, but there's going to have to be some kind of repairing, kind of a healing process, and making sure the first things first, maybe putting that higher high and then higher low. That will be the first foremost to see in that kind of trend, because I don't think that's gonna just go straight up like that. It's gonna do its thing, and then you want to see higher lows and higher highs. So, well, hopefully this video has been helpful for you, and until next time, thank you for following the blog, thank you for following me on the Twitter and the YouTube, and have a great night.